Hello everybody, welcome to stage one here at the SportsPro OTT Summit USA. I'm William Tubbs, SportsPro's head of event content, calling in from a rather cloudy, rainy Wimbledon, and I'm pleased to be with you today as your stage host over the course of the next 2 days. A stage, I may add, that has an abundance of great content across various formats, which I very much hope you will stay with us for the duration. Between now and the close of play tomorrow, we'll be hearing from the likes of NBC Sports Group, UFC, Instagram, NASCAR, YouTube, and the MLB, among many others. With so many specialists in the field lined up, the last thing you want is to hear loads from me, so I'll keep it pretty short and sweet. So here are some key points. You can follow the conversation, have your say on social using the hashtag OTTUSA21 with our Twitter handle at SP_influencers. The Swap Card app will be your point of call for all things agenda, networking, social, and technology demonstrations. During a time whereby we've been prevented from seeing each other, we're naturally very keen to make this event as interactive as possible, so we welcome your engagement across all areas of the platform. We particularly encourage you to use the live discussion feature during each session, which is in the bottom right-hand corner, formed as a pop-up. Get involved in the conversation, let us know where you're from in the chat tab, and don't forget to ask any questions using the relevant box. Finally, if you have any issues or tech difficulties over the next 48 hours, please do lean upon our team via the help desk tab in Swap Cards. Right, my role is very much facilitator of the experts here, so I'll be popping periodically during the course of the 2 days to introduce the opening keynotes and close off the 2 days. But without further ado, I think it's best that we crack on with the opening keynote session titled Leaning the Way Forwards for fuboTV, with the co-founder and CEO David Gandler discussing their 2021 plans and the latest numbers which were only announced yesterday. So to do that, let me hand over to SportsPro's very own Managing Director, Nick Meacham, who'll be moderating this fireside chat. Nick, over to you.
Thanks very much, Will, and great to be here with David, who's no doubt having a pretty frantic and frenetic 48 hours with the earnings call and report just out yesterday. So without further ado, I'd like to welcome David, CEO of fuboTV. David, great to have you and good to see you again. It's 24 hours for you right now.
Yep. It's what you'd expect. We came out with our earnings yesterday. We had a solid 2020. Fourth quarter came in very strong. Net additions on the back of a very strong sports schedule was also solid, coming in at 92,000 new customers. So feeling really good about that and answering a lot of questions late last night and this morning.
Absolutely. Well, we'll dive into some of the numbers in a little bit, but we've got a very international audience. fuboTV is one of the most talked about broadcast media businesses in the wider media industry, and of course also in the sports broadcast world, which obviously this event is related most to. But could you just sort of paint the picture, like what is fuboTV today? You guys have been going through incredible growth, obviously, with not just the numbers which we'll go into, but what are the nuts and bolts? Like how many channels? What are you guys delivering now for viewers?
Yeah, good question. So Fubo is what I like to call is a sports first cable TV replacement service. What that effectively means is we put more sports programming into the basic tier. Our slogan is come for the sports, stay for the entertainment. So we've got over 110 channels in our basic pack. We have over 50,000 sporting events on the platform, everything from, high school football, American football, all the way to the Olympics and the World Cup and the Super Bowl. So it's a pretty wide breadth of sports programming. We have the largest, American football package in the United States with all the NFL games as well as every college football league. So you've got, all of that programming, and obviously soccer is where our DNA is, and we're extremely strong there as well. We also have the largest regional sports network portfolio from all virtual services in the United States. So for those who don't know, regional sports networks, there's some requirements around the U.S. leagues where there's geo fencing around local programming. So we have local sports, which is if you're in New York, you would get the New York Knicks or the New York Rangers, and we have national games where those would air on a national network like Turner or NBC network. And then we have out of market games. So if you live in New York and you want to follow the Golden State Warriors, you have to buy an out of market package. And so even the technology around all of this gets pretty, pretty difficult to handle. So it's a pretty complex system that's really focused on geo-targeting and over 40,000 zip codes. So that's sort of the key basis for the programming. On top of our sports, we carry incremental sports add-ons, so things like Red Zone and other international sports programming. And then we also build out feature sets for sports fans. So the first to stream in 4K for live sports. I think we started with the 2018 World Cup was our first event in 4K, and we're going to do about 100 events, I think, in 2021. And then we also develop other features like multi-view, et cetera. So if you think about our service in the vast sea of streaming services, we are highly focused on sports.
Absolutely. Now, in terms of yesterday, you had the earnings report come out, and you've obviously been spending a lot of time answering questions, as you did say. We've actually got a slide with some of the highlight numbers you shared in the key takeaways that we might just bring up now to get our audience clued in on. For those that can see their home, there's quite a number there. But what are some of the key highlights that you think are the ones that really stand out for you over the last quarter and also for 2020?
Yeah, well, as you know, 2020 for the whole world was a very, very complicated year. But for sports in particular, right, as you know, Q1, Q2, there were effectively no sports on TV. So I think that we've done a great job finishing up 2020. For me, the major highlight is the $105 million of revenue in the fourth quarter. It was our first $100 million quarter. And then just, the amount of subscribers that we continue to add during a very heavy sports season, which when you look at traditional television subscriber additions, most of them were negative. And then as you look at sort of from those that actually provided their numbers, we actually outperformed everybody. So, we had a very, very strong year, but it also highlights the fact that maybe our business is slightly different than traditional television and virtual MVPDs, similar to Fubo, because we're able to grow very quickly on the back heels of a strong sports calendar, which was very similar to what you saw in the wagering space with the likes of some of the bigger players in sports betting that had really solid fourth quarter. So I feel like our performance is probably closer to the betting companies than it was to the video companies. And that's probably, again, because of our sports focus that, I think that's related to. And also our branding and positioning in the marketplace.
Sure. And you talked about sports there. I mean, you position the brand ever since you've launched fuboTV as the sports first broadcast proposition. How do you quantify sports value to the platform itself? Because obviously the platform's now so expansive. There's all these different channels that you can access. It's one part of a bigger pie. Do you feel that because the sports focus, it allows you to attract a certain demographic and audience, and really that messaging really resonates? And on the flip side of that, does it actually impact in some ways negatively to other demographics that maybe aren't as interested in sports as well? How do you make sure that balance is right?
Yeah, so that you're right. The key is finding the right balance, and we have been attempting, and we've done so successfully, to carve out an area of streaming where we think we can take a significant market share. And so for us, really, it's about targeting the right demographic. And sports programming is, I would say, relatively inelastic. If you like Premier League football, you're going to want to pay for it. If you like the NFL, you're going to want to pay for it. When you think about entertainment, it's a little bit different. In my opinion, entertainment is more fungible. So you have a 2-hour time slot that you want to fill watching a TV show or a movie. So the question is, do you watch, a James Bond movie, or do you watch a Tom Cruise movie like Mission Impossible, which you'll probably get the same, entertainment value from either of those. You cannot do that. Sports is not fungible. If you like a specific event or you like a specific team, you just can't go somewhere else. So the first thing is that I think one is it's less elastic. And then the second thing is we're amortizing sports over our whole base. meaning that if you look at a traditional television streaming offer, typically you have some people that like sports, some people that like entertainment, some people that like news. On our platform, over 90% of our customers, in fact, during the heavy sports season, it's as high as 96% of consumers are watching sports on the platform. So, we obviously are deriving more value from sporting events than, say, a company that also has some sports and is really general entertainment focused, because maybe only 30 or 40% of their customer base finds value in sports. So for us, obviously, it's more valuable. We're able to extract more value for our customers, and on the other side, we also have an advertising business. So we have a subscription component and an advertising component. And in the fourth quarter, we exceeded $8.45 per customer per month. So it's a pretty solid number, and that's on a net basis. So that's after fees to some of the third-party platforms like the Trade Desk. But so for us, I think it's really a balancing act, and I think that there's probably a place in the world where there's a more expensive streaming package that has all the sports with entertainment under one roof, and that's kind of what we have been gunning towards here in the United States.
You talked a lot about sports and its inelastic value relative for the consumer market. But in a lot of instances, when I speak to rights holders and also some broadcasters, there is a bit of fear that the opportunities and the access that particularly younger generations are having to different forms of entertainment, the obvious ones being gaming, esports, social media, and TikTok and so forth, is cannibalizing that inelasticity, let's say, of the sports consumer. Do you see any of that at all? Do you think that sports has lost its position on top of the mantelpiece as the lead offer or lead proposition, or is it still very much number one for the future?
Yeah, so I think, first of all, not all sports are created equal. I think we know that. Just like any product, right? You have certain sports that are able to attract a significant number of eyeballs, and you have other sports that are more niche. But if we were talking about sort of the largest, sports or leagues, in the world, then obviously the more distributed it is, the better, and that level of distribution is very important. So, in the United States, for instance, you have networks that are sub-licensing to distributors. So, in the UK, you have Sky. Here, you have companies like Fubo and Comcast, and Time Warner Cable, et cetera, Charter. So it's fully distributed, and that's why it's successful. I think if you try and put some of these events or you close them off into a walled garden that doesn't have enough distribution, I think that's where you don't see enough marketing. And of course, if you're not, out of sight, out of mind. And I think that's something that leagues are going to have to deal with over the next few years, because media companies are, they want to build up their streaming services, and, they feel that they can use sports to do that in the short term. But, I do agree that as long as the leagues are well distributed, I think the actual price at which people are willing to pay will still be greater. There's enough highlights and enough information out there for younger people to get excited about. I think the other thing is really it's the format of games. I think some of that has to change as well. Some sports, are a little bit more outdated and are too long. If you think about the attention span of younger viewers, they just want to get the short version. So that's something to deal with. But again, that's storytelling and narrative and making sure that, leagues and events are very well distributed.
Are you in a position now with some of your broadcasting partners to relay some of that feedback, looking at the data that you guys are putting together? I think one of the points you referenced in a recent chat is you produced something like 20 billion data points across a month of insight into the audience. Are you sharing that with any of the sports properties and networks you are working with to give them sort of a guidance as to what they're doing? And do you think there needs to be some real revolution in how some of the major sports are being run to make sure they don't lose people in the future?
Yeah, I think well, first of all, we haven't provided that information yet. We're pretty transparent. We do provide data, anonymized data, of course, to broadcasters so they can insert advertising into our platform. But in terms of work with the leagues, we have not yet really reached out. We had a very difficult year in 2020, as I said, for everybody. And now that we're a New York listed company, and we've got a couple quarters under our belt, I think we're going to start to open that data up and have more discourse with some of the leagues, because we do understand the viewership very well. We understand what properties are doing well. I'll give you one very good example. The Super Bowl. I think there's been a lot of noise around the fact that Super Bowl ratings are deteriorating. Frankly, we didn't see that. We saw an increase of 84% in terms of unique viewership. Per minute viewership was in the hundreds of thousands. So that's concurrent viewership, which we also don't see on a per minute basis, which the game is about 2 hours long. So it's a pretty solid number. And then we saw total hours viewed during the Super Bowl. That includes pre and post game, increases of like 94% or higher. So, clearly there's a lot of excitement about sports. And I also think that wagering is all important component, at least in the United States, from what I see, to sports, because it actually creates that level of engagement that, you see in games like Fortnite, where you can go out and buy a skin, or really sort of get a sense for what's happening on the field. And I think people will stay engaged more often as they have more quote unquote skin in the game. So, I think from that perspective, I think sports are in a good position. But yes, it's important for them to start looking at the data and really trying to understand, what the capabilities are and how they can sort of grow their positions.
Sure. I think there's two things I really want to sort of jump into now is the gambling side, which you've sort of segued us nicely into, and also a little bit how you're integrating your advertising. But let's talk the gambling side of things first. Now, obviously, you guys have made some investments or acquisitions with investments into Auto Sports and Victory. Could you tell us what you are trying to? Could you paint a picture of what you're trying to build and how you're looking to integrate that into your TV platform? What that's going to look like and how that's going to integrate for consumers?
Yeah. So the two acquisitions are somewhat different, but they allow us to sort of build towards the same ultimate goal. And the ultimate goal is really to enhance the video viewing experience. It's what I was saying before about leagues. It's about what can we do as a broadcasting platform to really enhance that experience and to drive additional revenue streams. Because you can't just raise prices in perpetuity. At some point, as I said, there's a price where you just can't afford it, and that's that. So you have to look at different revenue streams to complement the subscription business. So for us, Balto allows us to really focus on free-to-play games, and the free-to-play games will allow us to better understand, types of games that people like to play. It will tell us on the types of sports, the types of plays, the level of engagement, the impact on viewership, the impact on advertising sales, right? So that also allows us to start leveraging the data and understanding how to build, machine learning algorithms to really surface the right plays or teams or players that you like throughout a week to kind of remind you, hey, maybe you like Cristiano Ronaldo. Cristiano Ronaldo is not playing this week because Serie A is off, but Portugal is playing and Cristiano is on Portugal. So is there ways for us to really sort of expose people to other events or games that they may not have watched because it's just something that they didn't do on a regular basis. And what that does is that while we're building out our wagering capabilities, getting all of that data in will allow us to better understand what types of games, what types of plays. Do we build our own markets, within Fubo because we have a specific, user base that is looking for very specific plays for potential parlays or other bets. So, or prop betting, which is probably more important and more relevant for a service like ours. So, it's something that we thought about in November. We're moving very quickly on that front to sort of get something up and running. And as we said, we'll look to launch a free-to-play game somewhere around Q3, and then our Fubo Sportsbook somewhere around Q4. And so in the interim, the idea with the free-to-play is that you could actually put that on across nationally. And that's important because it allows us to, one, get people playing and really understand. And as we on the wagering side, we at least have a starting point to kind of move a little bit quicker.
Sure. And with the gambling side of things, the integration into the platform, it sounds like you're still, several months away from delivering that. But obviously, gambling isn't for everyone. In the US, it's a new initiative. But again, state by state, there's obviously complexities around geofencing and regulation. You obviously have to navigate. So how are you going to navigate that with the platform? What are you going to create a different experience from market to market that's fluid? How do you personalize the user experience to make sure that you are serving them? If they love gambling, they want to get involved with that, they can go for that. Have you already got those sort of initiatives in place to tackle that? Or is that something you're going to need to develop over the next 6+ months?
Yeah, so that's exactly why we had acquired Victory. One, they have a lot of experience with the regulators and regulation. Scott Butera, who comes along with Victory as part of the management team, was the president of MGM Interactive Gaming and formerly the CEO of Foxwoods Casinos in Connecticut. So that was obviously a very important acquisition for us because there is a lot of regulatory tape and the requirements are complex and you need to navigate through there very quickly, which again, we're already doing, and we just closed on I think it was Friday or Saturday of last week. So that's something that we're focused on. But again, this is where the free-to-play games comes in because it's going to really, you're supposed to iterate. That's what we've done over the last 5 years. So we're going to launch a few things. We're going to test them out. We'll start to iterate. We'll see where we're getting traction, and as the wagering app sort of. Can you guys see us? Sorry.
Yeah, I can see you.
Yeah, I think we lost you for a second. So that's sort of part of the process, and I think we still consider ourselves a startup, and that's kind of how we plan to move forward. It's just through iteration. And so on the wagering side, again, it will launch state by state. We have our first market access deal in Iowa. Our goal is to secure 2 to 3 more for 2021. That will allow us to take a measured and disciplined approach to understanding how we can, leverage the synergies between the two. And the more we look at this, the more excited we get. There's so many synergies that we see. Synergies around marketing, right? Synergies around monetization. Synergies around engagement and retention. So again, this is sort of a learning experience, but just based on our track record, we learn very quickly. We iterate quickly. And the reason why we decided to acquire smaller companies is so that we can very quickly, bring them in without really having to deal with some significant integration risk, which, as you know, is always a problem, right? Integrating companies is difficult. You have, cultural, consequences. You have, different mentalities. And so for us, smaller teams that are like-minded allow us to sort of build off of that. So that's sort of the game plan.
With just one more question on the gambling side and the way the sports wagering, with what you're trying to build with the sports book and how that's going to integrate, does that preclude you from doing deals that you would potentially be able to do otherwise with other betting agencies and organizations to partner up to generate immediate revenues? Because you're looking, I guess, taking a different approach to it to a lot of what other broadcasters are. Why the decision? You talked about integration but I'm guessing you're leaving some money on the table in the short term by not, say, partnering up with some of the big books at the moment. Yeah,
no, you're right. Look, first of all, we are, I would say, we do have deals with sports books today. For Q1 and Q2, because we're not launching in Q1 and Q2. So it doesn't make sense for us not to do deals. And the reason why we're not worried about that is because we're going to offer an integrated service. So I think that's going to create more value for people. And, if you look at the last Canby report, I think it was in out last year, Canby claims that the average, sports bettor has 4 apps on their phone. So it's not a zero-sum game, very similar to video. And we're looking for more the casual fan. I think you mentioned, not everyone's a bettor. Yeah, not everyone likes to bet, but if you think about the Super Bowl or March Madness, or there are events that lots of people participate that don't normally participate. It's the same thing around soccer, where there are people that don't watch soccer 4 years, and then they watch the World Cup, right? Or they watch the Women's World Cup. So I think that there's a place for us where we're enhancing video and really focus more on the casual gamer versus the whale. And we've done a bunch of surveys on the platform. 22% of those surveyed on Fubo would be willing to place $100 a month, throughout the month in bets. That's also a really good sign, given the fact that we really haven't done anything yet. And then also, just if you think about the incentives today that a lot of the books provide, it's all cash-based, which to me has very limited value because everybody's doing it. And I don't even know the value of one offer versus another. But, being able to offer a video for free, or, a sports package for free, or, extended highlight capabilities or 4K, we think that we can, again, create value that, has not been created yet in a way that, people just are thinking about, but just don't know how to approach it.
Sure. Okay, look, there's some questions coming in from the audience. I thought it'd be best to check out some of those and throw them your way before we move on to the advertising side of things. But here's a question from John Warrington. Basically, he's asking, how important is sports documentary programming to you, as it seems to be such a growing market, and has that reflected in any user engagement that you're seeing?
Yeah, sports documentaries, I would say in the grand scheme of things are very important. As I said in my opening comments, we like to say, come for the sports, stay for the entertainment. So, you come in for a sports event, and then it's the platform's job to surface, compelling content. And I think Fubo has over 100 sports documentaries on the platform. And again, some of them you would never think of watching until it's been surfaced for you, on sailing or other sports, where it's actually really, really interesting stories and narratives that that people are inspired by. So it does play an important role. Obviously, it's not front and center for us, just given that the live nature of our programming. But certainly, we think that it rounds out our service very nicely.
Sure. Another question from Christopher Harris is, what can you tell us about fuboTV acquiring sports rights directly that have exclusive rights to games?
Yeah, look, I think that, it's hard not to think about that because, we do get approached by rights holders. We have acquired, hopefully you can see those people in the background. That is I just want everyone to know it's not Big Brother. No one's watching. Just, no, it's look, we're going to be opportunistic. I've said that before. As we continue to grow our base and we better understand, what our customers are looking for, I can see us, looking at rights on a regular basis. And, at some point, I think it'll make sense, especially given the fact that we want to enhance the viewing experience. And I think for sports rights holders, a partnership with us, if I think long-term, might actually be quite valuable because they would get access to data. We would collaborate on other things like wagering and really sort of pushing, these leagues. And I think if you look historically, what Fubo has done for soccer, international soccer in particular, in the United States, I mean, we market like no other streaming service in the United States. I mean, we market by game, we market by player, we market by league. And we have a whole creative department within the marketing team. Everything is done in-house. And we're very supportive of all of our partnerships. So, of course, nothing that we're doing at this moment, but obviously, we have to keep one eye on that.
Sure. Looking back at some of the numbers that you shared yesterday, obviously you had huge growth in revenues year on year with your subscription, which obviously was to be expected. 260,000 net subscriber additions for the second half of last year, getting you up to 550,000. Advertising also has started to grow quite a lot for you. Your background is in the ads game, in programmatic in particular. So naturally, advertising would be something that you would want to lean on because of your background. But how do you navigate that? Because a lot of subscription-based businesses typically have quite a simple model there where they don't have advertising available. How do you make sure you navigate that? Because I think just to paint, I guess, a bit more of a picture, you saw a huge increase in content consumption over the last quarter as well, over the last half of the year. Yes. So how are you making sure that the ad experience is driving enough revenue for you to improve your margins whilst not impacting your consumers who are paying a pretty big premium for a subscription each month?
Yeah, it's a very good question. I think the difference between our platform and other platforms is that we started with sports. And I don't think that you will ever have a sporting event that does not have sponsorships and advertising. And so when people come to Fubo to watch sports, it comes with ads. And it makes it much more palatable to continue to watch programming with ads. Now, we have capabilities such as DVR. We now have 1,000-hour DVR. We started with a free tier of 30 hours and then went to 250, 500. Now we have 1,000-hour DVR. So people can actually, record programming, ad skip if they like. That's up to them. There's also premium channels on Fubo that you can buy that don't have any advertising. So channels like AMC Premiere or Showtime, Epix, Stars. So there's ways in which that you can continue to watch. And our goal is to be sort of the basic streaming service that someone buys. And then on top of that, they would buy streaming services for $4 or $9 or $10, et cetera. So think of this as sort of your window to video. That's how I look at it. And live TV still plays a very important role. About 90% of total viewership on Fubo is live. So, if you think about Spotify music, the popularity of Rap Caviar or some of these other channels, these are curated linear channels, if you will. And people sometimes just like a passive experience. They want to sit down and very quickly find the content that they like. But I don't see advertising as a huge issue. That's number one. Number two is that I think for most streaming services, let's take maybe Disney and Netflix out of the equation. It's going to be very difficult to monetize content just on a subscription basis, because while sports content continues increasing in cost, you also see the competition increase for high quality, serialized television as well. And so if you think about television in the United States, 60, 70 years ago, it all started with 3 broadcast television networks, right? And those were free to air that were advertising based. And, 20, 30 years later, they wanted to get paid in fees, and we pay affiliate fees for these broadcast channels that are not cheap. And so, if you take out the advertising from the dual revenue model that they have, you're looking at businesses that are, probably not very exciting from a profits perspective. So I do believe that most businesses will require both revenue streams, and because we are sports first, I think we are, better positioned for consumers to, I would say at least, keep it in a way that it's palatable to them, right? But again, there are add-ons that you can buy that are ad-free.
So for your future outlook over the next year or a few years, you've obviously got this window of time where you've got, particularly on the shareholder perspective, you've got shareholders who are looking at the timeline of when the business is going to be becoming profitable. Right. You're at the moment showing the numbers of growth, which now is all about scale. But at the same time, you've got the costs that are going out are hugely significant. There's a big gap in between those. Firstly, what is the sort of timeline you would expect that you're going to sort of say, let's say, turn the corner, so to speak, in terms of hitting those numbers where you're at that break-even point and progressing into profit? And how important will be advertising and gambling to that, or are they just two parts of the bigger pie and it is really all about subscription? They're just sort of not cream on the top, but they are just topping up the revenue streams that you need to the P&L.
Yeah. Thank you, Nick. That's a very, very good question. Look, the way I look at it, and I mentioned it in my comments yesterday, was that if you look at Fubo as a platform, we command a significant timeshare of a household's sort of monthly activity, right? The average household right now spends about 127 hours. That's average on Fubo in the fourth quarter. Okay, I anticipate that number will continue to grow. So the number of hours is growing, and the number of hours people spend on Fubo today on a daily basis is 7.2 hours. That is that's a third of your day you have the Fubo platform on. That is a very powerful thing. If you look at Roku's numbers, which is an amazing platform, they're averaging 3.5 hours. So it just goes to show you how much time people are spending on the platform. So what does that really translate to when you think about the economics of the business? So yesterday I also mentioned that the average customer spent about $754 for the year on Fubo, which includes $80 plus of advertising revenue. So with the number of hours that we're able to command from the average household as we scale, the question is, can you get to $1,500 per customer per year or $2,000? And it's much easier to squeeze profits out of $2,000 a year than if you're selling a $4 product, and you're getting, call it $40, $45 per year. So I think we're in a very different league. And I think the more time that people spend on the platform, the more revenue generating products you're going to see us launch. Remember, you mentioned 20 billion data points. We're collecting a lot of data at the moment, and we can actually see as we build profiles, as we see who's betting, as we can then start to understand what else we can provide to consumers to sort of expand our relationship with them. Very similar to think about what an Amazon does or an Apple does. It's all about ecosystem. I think that there's an ecosystem opportunity here that's built around sports. So obviously subscription revenue, number one for video. Number two is you have advertising revenue, which I think already is at $80 per year. The question is, can that get to $100 to $120 per year? And we're just getting started. So I'm pretty confident that that's achievable. And then the wagering, just looking at some of the information that's come out after some of these earnings calls, but $60 of monthly ARPU, that's a pretty good number that has a 50% gross margin, and 10% EBITDA. I think that's to me is very compelling. So, my goal is to continue to expand our base, to scale it out, to own more and more share of time in the household, and continue to find ways in which that we can monetize our customers. Obviously, it has to make sense. You can't just throw any products in the mix. But I feel that between advertising and wagering, there's a very, very large opportunity. And if we continue to scale out and add more hours, there could be more products that we'll look to sell. Commerce, for instance, is another area where I think is really compelling, where you can sell jerseys and uniforms, and in fact you can even you're watching a football game, why not just press a button and get DoorDash to deliver wings to your house for your party? So there's lots of things I think that we have to be very creative about. This is very early in the process, and I think the top line revenue right now is a focus for me because it does open up a lot of doors to us. That means we can acquire more content. We can optimize our content bundles, which you saw. And I think that our ability to actually increase our contribution margin, which effectively, I think as of mid 2021 or end of 2021 will be our gross profit. That has really expanded over 2020. And just to remind everybody on this call, we were negative margin. And I remember back in January of 2020, people were telling me that this is a business that will always be negative margin. Okay. And here we are with not only positive contribution margin, but contribution margin that, is up 1,100 basis points, from the prior year. So I feel very good about where we are. And I think that we have the right revenue streams. And I think the tailwinds are very strong. And, we're building a product that is unique in the marketplace that already has really solid traction. So I think profits will come, cash flow will come. And there are companies like Netflix that have waited 25 years. Now, obviously, we're not Netflix and no one's expecting to wait 25 years. But, we haven't really spent as much money. If you look at the level of expenditure on the wagering side, or you look at the level of expenditure on the video side, I mean, we have been, in my opinion, very, very efficient and very effective with our capital. I don't think anybody would say otherwise.
Great stuff. Well, look, we're out of time. I want to ask just one real quick question before we go. And sorry for those that have come in that I haven't been able to get to. But what can we expect from other markets outside of the US for fuboTV?
Obviously we have big ambitions. We wouldn't build a product if we thought it was just for the US. We're looking to expand internationally. We're having conversations all the time, the good news for us is that because we're building the US, there's no real set time frame where we have to launch in Europe. But, we're looking at Europe, we're looking at Southeast Asia, we're looking at the Middle East. We've been approached by a few groups and, we're having conversations. And I think once we launch our wagering product and our free-to-play games and that starts to go, I think, probably 2022, we'll start to probably focus in a little bit closer on those opportunities. And by the way, we'll have the data that we need to really understand, how to, onboard some of these countries. The other thing we'll be doing before international is that, we're continuing to invest in our tech stack. And we're doing it in a way that will allow us to very quickly expand into other countries at a lower cost. So those are things we're already thinking about without actually having to make a play into a specific market.
Great stuff, David. Well, I've really enjoyed your time having you with us today to kick off the event. Thanks very much. And look forward to following fuboTV's next steps. Thanks very much.
Absolutely. Thank you so much. Have a good one.